Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to ever feel like companies are speaking a different language. Well, today we're cracking the code on Noble Corporation's proxy statement. Get ready for some board nominations, auditor appointments, and a whole lot of talk about executive pay. Let's see if anyone is getting too much free money. Ha! Noble Corporation, a major player in offshore drilling, just released this document to prep shareholders for their big annual meeting. It's like a cheat sheet for the important decisions shareholders need to make. First things first, let's talk about what's on the agenda. Think of this as the meeting's table of contents. We've got the election of directors, basically choosing who gets a seat at the table, ratification of their accounting firm, aka the bean counters, a non-binding vote on executive pay. This is where shareholders get to say if they think the big bosses are earning their keep, and then a few requests for authorization to allot shares. Noble's been busy making moves. They tell us how they acquired Diamond Offshore Drilling. This deal made Noble an even bigger fish in the Deepwater drilling pond. They also had a big deal with Maersk Drilling back in 2022, and all this has made them a leader in the world of deepwater drilling and harsh environment jackups, which are those rigs that can handle the toughest ocean conditions. Now, who's steering this ship? The board of directors. Noble emphasizes that their board has diverse backgrounds, pulling in experience from Noble, Maersk Drilling, and Diamond Offshore. They even added Patrice Douglas in September 2024, bringing more legacy diamond expertise. The company believes they have a great balance and perspective. It's like the Avengers, but for offshore drilling. Mark your calendars. The annual meeting is happening on May 8, 2025 in Sugar Land, Texas. If you're a shareholder as of March 10, 2025, you get a say in what goes down. They are going to vote on, among other things, on electing directors, picking the accounting firms, okaying the director's report, and voting on buying back shares. Remember, shareholders, if you own shares through Euronext, you have different instructions. Speaking of directors, shareholders will vote on electing and re-electing 7 folks. Each nominee gets their own vote. These are the people who will be guiding Noble's strategy. There's a lot of Keiths and Claws and Kristen and Robert. All your typical offshore oil people you know. They also talk about their director designation rights for some shareholders under the terms of their relationship agreement to nominate 2 directors. The company highlights that most of their directors are independent, meaning they don't have any business ties to Noble other than their board service. This is supposed to ensure they're acting in the best interests of shareholders, not management. Also, the various committees are made up of independent members too. It seems someone missed a deadline. The filing mentions that one director, Richard B. Barker, filed a report late about buying company shares. It's a small thing, but it shows that even the top folks can have a slip up. Let's dive into the juicy part, executive compensation. The named executive officers, or NEOs, are the top dogs whose pay gets disclosed. In Noble's case, it's Robert Eifler, the CEO, Richard Barker, the CFO, and then Joey Kawaja, Blake Denton, and Jenny Howard, all senior vice presidents. How did Noble perform, and were the executives rewarded accordingly? The report highlights Noble's position in shareholder returns, with lots of money going back to shareholders via buybacks and dividends. They also talk about strategic mergers, especially the Diamond Offshore deal. Noble says their total stock return landed in the 44th percentile compared to their peer group, which means there's room for improvement. While they are trying to be humble, they are saying that they outperformed many competitors, but others had better returns. There's definitely a customer satisfaction element too. Noble's been chatting with shareholders, gathering feedback on everything from ESG initiatives to executive pay. It sounds like they're trying to be responsive to investor concerns. That's always a good look. Here are the compensation components, how the sausage is made, so to speak. First up are base salaries. CEO Eifler made $941,667. Numbers are all about retention. The company really doesn't want to lose increases. We're driven by what the company says is market competitiveness. These types of numbers are all about retention. The company really doesn't want to lose these guys. Then there's the short-term incentive plan, or STIP. This is where the executives get rewarded for hitting annual goals. For the CEO, if he maxes out his short-term bonuses, he will make another 1.3M. Those goals are usually based on financial performance, safety, and other key metrics. So the executive gets rewarded, but how did they perform? They point out that they hit 109% of the performance targets for the STIP. Adjusted free cash flow, safety numbers, and their customer surveys were all great, and there's more in their internal scorecards. It all culminated in 109% of targets, so all the executives got an extra 9%. Then we have time-vested restricted stock units that promote long-term retention and also a performance component. in their long-term incentive plan, the executives have a chance to earn even more based on time and performance factors. But of course, if the company fails, so do the executives. It's like they have some of skin in the game, so they better perform. Important note, Noble has policies in place to prevent executives from hedging their stock or using it as collateral. They take these things seriously so that insiders don't have undue influence on share price and direction of the company. What about the board? Well, they get a mix of cash retainers, committee fees, and stock awards. This is a way of making the board accountable and aligned with everyone. All of this is paid for by, you guess it, shareholders. PricewaterhouseCoopers LE or PAC is the company's independent registered public accounting firm. The audit committee oversees the relationship, making sure PBOC is independent and doing a good job. KIM fees paid to PwC are in the millions. The audit fees were over $8 million, and then there's tax fees on top of that, plus some consulting fees. Shareholders get to vote on ratifying the appointment of PwC as the company's auditor. Essentially, they're giving their stamp of approval. There are also some resolutions for the UK parts of the company relating to the compensation and report that the auditors get paid to comply with UK accounting laws. This is basically asking shareholders to give the board the go-ahead to issue new shares. They're asking for up to 20% of their shares, which is a lot. This could be used for anything from raising capital to making acquisitions. Noble is asking shareholders to approve the terms by which they can buy back their own shares on the market. Think of it as asking for a license to engage in share buybacks. This helps increase the price of outstanding shares. This authorization will be valid for 5 years if approved. They name JP Morgan and a few other banks as approved counterparties. Now for my take. Noble Corporation has successfully navigated a complex industry landscape, emerging as a key player through strategic mergers and acquisitions. Their shareholder return is a big win. It shows they are giving money back to the investors and they are focused on value and cost. However, there are some notable considerations. It's important to note that hitting the 44th percentile for TSR when the peer group didn't even have a large average return is not that impressive. It means the whole industry didn't grow, and maybe Noble had more to do to really stand out. Also, it's difficult to assess the actual operational impact of their first choice employee initiatives. It feels like they're ticking boxes, but I want to see tangible results, not just surveys. Despite these points, Noble has a lot to be proud of. They've streamlined operations, boosted cash flow, and are trying to get ahead of their environmental goals too. If Noble can continue to build on their strengths, it will be interesting to see how well it does for shareholders over the next few years. Thanks for watching. If you found this decoding helpful, be sure to like, comment, and subscribe for more deep dives into the corporate world. Until next time.